Kingston recently acquired the Mineral Hill Gold-Silver Mine in Corbett, and just yesterday delivered a definitive feasibility study for the large, long-life Missima Gold Project in PNG. To tell us more, please welcome Andrew Corbett.
Thank you, Christy, and thank you to Reed Corporate for hosting a fantastic conference so far here in the Gold Coast, and it's a pleasure to be here, and I appreciate everyone hanging in here to presentation number 24, but I assure you it's going to be a very interesting one. So Kingston, we've been building now for 5 years, coming on 6 years. We've been very focused on building a mid-tier gold company. We currently own 100% of two projects, being the Missima Gold Project in PNG, which we published the DFS on yesterday, and the Mineral Hill Copper Gold Project in New South Wales. We only closed that transaction on Mineral Hill back in January, so we've been a gold producer now for 5 months. And I must say, after 5.5 to 6 years of no cash flow, it's very nice to be selling some gold bars. So yeah, it's a fantastic opportunity in Kingston at the moment because we have a very large reserve base, infrastructure rich. Both projects are brownfield projects. Missima produced gold for 15 years and Mineral Hill produced gold for 15 years. So we look forward to progressing both of these projects and delivering shareholder returns by unlocking the value we have within these assets. So just stepping through a bit of detail, and then I will spend some time on the Missima DFS, and then we'll get into Mineral Hill. So the project has a 20-year mine life. It's had average production of around 130,000 ounces and runs for 20 years, which is, in a junior of our size, is a fantastic position to be in. It's very low cost. So Missima, when it was in production, operated at the bottom of the cost curve, and on our numbers it will again. So there's no reason to see that things have changed there. So that's a fantastic opportunity for us. Production-wise, 2.4 million ounces with a 1.7 million ounce reserve. So that's a fantastic position. The project's advancing part through approvals as we speak, and we're looking to submit those next quarter. Moving on to Mineral Hill and where the production and the cash flow is coming from today. So as I said, we're currently producing from processing the tailings. Now, Mineral Hills comes with its own growth platform. There's a number of opportunities at Mineral Hill after the tailings production. Tailings production gives us the current 2 years of production, and we're busily drilling and working on the mine plan to build out the next 5 years. So what we're talking about here is taking this out to 2029, 2030 from a fantastic transaction that we completed in January. We only paid $23 million for this project. So in terms of the company, and a bit of a snapshot before I get into the DFS, so Mick Wilkes is our chairman. Most of you would know him. He was the managing director of Oceana Gold. He has built 4 gold and copper mines. I'm a mining engineer. Tony Wiebe, our non-exec director, was chairman of Aurelia when they built Hera. So that's a lot of good experience within, Cobar and obviously building gold projects in Asia Pacific. Myself, as a mining engineer, West Australian, been living over on the East Coast, so very focused on building a gold company in the East, which has been actually a lot of fun. It's not all the fun's in WA, put it that way. So in terms of our market cap, we're a $55–60 million company. So in terms of EV per ounce, I'll help you do the numbers shortly, but we're very low, the enterprise value in terms of our current resource base. About 400 million shares on issue and good cash position at the moment as well, with Mineral Hill now producing gold. In terms of shareholders, we've got a very strong shareholder base with Delphi, Farjoy, Winchester and now Quintana, all adding up to a top 40% in about 4 investors there. Mainly family offices, high net worth individuals. So just getting into Missima, most of you know where this is. It's in PNG. It's directly east of Port Moresby. There's 20,000 people on Missima. They've been producing gold for 100 years. And for 15 years, Placid Dome produced 4 million ounces from the Missima Gold Project. It's a very mining-focused community. They do either FIFO to other mines throughout PNG, or they produce gold themselves from their own workings on the island. So we have a lot of support, and it is the home of big projects. There are a lot of ounces and a lot of tonnes of copper getting produced in PNG today. So the DFS, a bit of detail, so 3.8 million ounce resource, 1.7 million ounce reserve. So just to help you do the math, that is about $11 per ounce EV per enterprise for Kingston on a resource basis, and about $20 per ounce, these are Australian, on a reserve basis we're currently trading at. So that's the value proposition that I'm hoping you guys can see today. In terms of what we're going to produce, 2.4 million ounces at $1,200 per ounce, all in Australian dollars, these numbers. NPV 956 million, just shy of the $1 billion. Hopefully, as we continue, the gold price keeps moving, that NPV will get over that $1 billion mark. So it's got a lot more upside, Missima. We've only drilled to a point where we can consider it's got the scale to build it. The current resource is still open, and just basically the pit shells go to bottom of drilling. Bit of detail again, I won't go through these numbers. $6 billion worth of revenue, I will point that out. $2.7 billion of free cash flow from the mine. The CapEx number has come in at $476 million, which is a big number for Kingston, and we acknowledge that, and that's when we announced the DFS. We have also stated we are now doing a strategic review and going to run a process. We're going to look for a partner. This is a big project. Kingston at 60 million market cap is not going to be able to put together a $476 million project. So we are looking forward to bringing that process to the table this year and unlocking the value and delivering shareholder returns. Ideally, we get a partner that we can maintain exposure to the project. The reserve, I will talk about that briefly. 15-year mine life on reserves, 20-year mine life on production target. So we do include some inferred ounces in our production target, but it's a big project, 1.7 million ounces. It is relatively low grade, but that is the history of Missima. It's always been a low grade project, but it's effectively a rock factory. It's economies of scales, it's big equipment, big throughput, and that's how you can drive the costs down on these large scale projects. You can see there the main pit is Yamuna. 96% of the ounces comes out of one pit. It's 2.5 to 3 kilometres long. There's one single haul road. The processing plant is being built in the same place that Placer had theirs, and we're mining the same pits that Placer had. So effectively we are trying to re-permit and rebuild a previous brownfields project that has produced 4 million ounces. You can see also from the second image there, we are installing solar panels in the project, and that'll actually be a first in PNG. So just like everybody, we're very focused on that ESG and trying to build a sustainable gold business. In terms of what's next, so we'll get the approvals completed in the next quarter. We will submit them. We will kick off the strategic review and the process to unlock the value in Kingston. We do think that Missima at the moment is an overhang on our shares, so we intend to basically find a solution where shareholders get paid for their patience for the last 5 years that we've been progressing Missima, and also hopefully we can maintain exposure to the project. Moving on to Mineral Hill, our latest transaction, I guess. We have had a history of buying and selling projects. We did have a gold project in Western Australia. We sold that. It was too hard to get to in the last few years, and we're just focused now on New South Wales and PNG. So Mineral Hill has previously produced about 400,000 ounces of gold and 33,000 tonnes of copper, and it will again. So every good gold company should have some copper credits. So we look forward to bringing the copper tonnes online over the next few years. Current resource base is about 500,000 ounces, and predominantly copper actually, 38% copper and 36% gold. So current production coming from the tailings, we've successfully ramped the project up. So when we took over in January, it was only running at 40 to 50,000 tonnes per hour. It's now running at 110 tonnes per hour. It's about 700,000 tonnes per annum, which is almost double what the plant used to do. We've reached the 1,200 ounce per month target, so over the last 2 weeks on site we've been able to achieve that run rate, so that's been a fantastic effort by the team. It is tailings reprocessing for the next 2 years. We will then start the 2 open pits and kick off the underground. What's the underground and the production future going to look like? So how do we get past 2030? We think we've got the resources already. We do not require discoveries. The Tailings Project, as you can see, the top line there, takes us out to 2024. We already have 2 open pits at Pierce and Pierce South. They are high-grade gold and silver. They're already in resources and reserves, but we are updating them. They're all done at US $1,300. Then we've got the SOZ Underground Project, which is really interesting, being a mining engineer and predominantly underground focused over my career. It's not often you get a resource underground with a decline already in place. So we can drive already to these areas. So we are just basically re-establishing access to underground. We've got some pumping to do, some ground support, and then we'll get a drill rig into the underground second half of this year. After that, there's going to be a bit of a race between Jack's Hut and some of the other targets. I'll talk about Jack's Hut a little bit more in the next slides, but that's actually one of my favourites. There's a lot of drill holes here, but I just will like to step through I won't talk through the numbers, but talk through the targets. So you can see Pierce North and South. They're our first 2 open pits. They're in reserves and resources. They are high-grade gold and silver. Our next focus of area will be the SOZ Underground. That is a polymetallic project, so you're getting copper, lead, zinc, gold and silver in that. That already has 1.8 million tonnes in resources. And for us at a 400,000 tonne plant, that's actually several years of production. You can see the green dots in this slide, I will point out, so they are in resources. The yellow dots are not in resources, they have no resources, but they have drill holes in them. And as I said, one of the areas I'm excited about is Jack's Hut. The reason I like it is because it formerly was an underground, highly successful, high-grade copper and gold, and there's a large stockwork that surrounds the historical underground that we potentially can open pit. We've drilled 4 holes into that in the last month, so we're looking forward to getting those results out in the next couple of weeks or 4 months, depending on how the assay labs go at the moment. Just looking at Pierce, we've released this drill hole, 36 metres at over 4 grams, plus a big chunk of silver, 37 grams silver. As you can see, the black line there, that is the current reserve at 1,300. It's obvious that once we recut these numbers, the pit's going to dive down on that high grade. So we do expect to grow both Pierce North and South. Those resource updates are due next quarter. The SOZ, we released a drill hole on SOZ 2 weeks ago, and it's probably the best drill hole that I've been involved in my career, and I think the share price went down. So that's how exciting this market is. But I'm hoping that changes now as we get out and talk to more people. You can see that intersection there, 19 metres at 1 gram copper, 5 lead, 5 zinc, 0.4 gold and a big chunk of silver. It's a very high grade intersection. It's drilled within our current resource, and we are drilling in that area on purpose to confirm it and update those resources. So this drill hole is about 50 metres off the decline in terms of access. That decline you can see there, the east and ore zone and travelling across to the SOZ is actually existing. It is in place. So when we completed the Mineral Hill transaction, a lot of people were a little surprised at the price we paid and the assets we got. Not only do we get a fully approved project, we get an operating plant and an underground decline. In fact, we have actually got 2 declines. Exploration-wise, again, as a mining engineer, and again in the last 5 years as running Kingston, I've learnt to turn the rigs off and take them away from the geos. But this is for the first time in a long time in my career that the excitement from the geologist is actually really interesting, because these IP anomalies that are shown on here, there's 10 of them, they actually are correlated with known resources and known ore bodies. So not only are they're a little bit more than just geologist's dream, they've got a lot of potential of turning into projects. Nearly all of them are within our ML and definitely within our existing EL. So that's a great position to be. So we've got the 6 targets I've already spoken to, and we've got multiple targets within our current ML. In summary, Kingston today is aiming to be a gold producer. We'd love to be a gold producer with copper credits. We've got our own inherent growth within both of our projects. Mineral Hill is ramping up. its Tailings Project, we will then expand and lift production, hopefully targeting that 50,000 ounce run rate. Once we finish the Tailings Project, then we'll expand hopefully again to bring the copper production and lift the ounces again. Misamah provides option value on a very large resource base for shareholders. Our intent is to run the process this year and unlock that value and continue to grow as a company. Thank you.